10 Ways to Manage Your Money as the Rich. Hello, ladies. Welcome to Single Moms Who Make Money. This is the place where you will gain knowledge on how to make money. For regular updates, please hit the red subscribe button and tap the bell icon. Now let's make some money, ladies. Most people look at the rich with all believing that they are somehow different or special from the average person. But the reality is that most self-made millionaires are just regular people who are good at managing their money. Those who have good money management skills enjoy a variety of different benefits that come along with good money habits. For example, a good credit score. This allows people to use credit for a variety of different things like buying a house, a car, or even assets like an investment property, and they can do this much easier than those who don't have good credit, and those with a good credit score tend to pay much less money and then trust than those with bad credit. And number 2, peace of mind. Most people have a sense of overwhelm when it comes to their finances. But the goal is to create peace of mind, knowing not only that there is money in the bank, but the feeling of knowing that we have full control over our finances. So here are 10 ways to start managing your money like the rich. I like number 7, but let me know in the comments which one you resonate with the most. Number 1, planning your monthly finances. The month before planning is the foundation of money management. Make a monthly budget at the beginning of the month, or better yet before the month starts, calculating what your monthly income will be and what expenses you're expected to pay. A simple way to do this is to split a page into 2 parts and arrange your total income for the month on one side and your total expenses on the other. This way you have a visually clear representation of money coming in, money going out. It is a good idea to have your savings or investment contributions listed as one of your normal expenses. This will help you think of your savings or investments as non-negotiable expenses, just like your rent or your electric bill, which helps you save and invest much easier. The goal is to plan your month. If we don't plan, we will enter the month financially blind, since we do not have a clear understanding of what we can and can't spend by creating a budget before the month starts. We are creating a financial plan that will guide us through the month, making it easier to make financial decisions. Now the expenses match or are already higher than your income, then it's time to make immediate changes. We must figure out what items in the expense column are making more money than they should. This can be a difficult task because we might realize that some things that we like are the cause of our financial stress, like a nice car or an expensive apartment. The goal of creating a budget every month is to create awareness and absolute knowledge of what our money is doing. This puts us in control of our money, where we can make educated decisions. This can go both ways. If you are already comfortable with the money you are saving and investing every month and still have some money left over, then why not add some more money to our fun budgets or travel budget? Once we have a full understanding of our money, we are in full control of it. Number 2, keep an eye out for non-recurring expenses. These are expenses that normally don't happen monthly but tend to always be there, like Christmas gifts or a vacation. If you're thinking about a trip to the Bahamas next month, but your normal budget cannot afford it, it can be dangerously easy to put it on a credit card and just pay for it over the next 6 months. The problem is that now we are in debt, which can put us in a vulnerable position. Something that can eliminate the need to use credit is to plan these expenses. If you're thinking about going to the Bahamas in August and it's January, you can do some research to see how much it will cost. Then you can set a monthly travel budget where you can save a little money every month to pay for this trip. Since you already know how much it would cost, you know exactly how much money you need to save every month to pay for your trip, all without taking any financial setbacks. Number 3, beware of small expenses. Small expenses, as insignificant as they may seem, tend to slowly add up a lot to a meal. A pair of socks can seem small at the time, yet can make a big dent in our wallets, or worse, leave us in the negative if we use credit cards to purchase them. Since these expenses are quite small, they run under the radar until the credit card statement shows up. But at that point, it's already too late. A good idea is to allocate a budget for these tiny expenses and keep track of them. A simple page on your notes app can be very useful to keep you aware of how much money you've spent on small miscellaneous expenses. In many credit cards, you can set up notifications to tell you how much you spent, and all it takes is just a few minutes to set up. Number 4, pay your consumer debts as soon as possible. Consumer debts are some of the highest interest debts out there and can be a major factor holding us back from moving forward financially. Getting rid of our consumer debt, like credit card debt, can help us free up money to put towards our goals, whether that is to invest in a retirement account, buy assets, or invest in our business. A good strategy to get rid of debt is the snowball method. with a breakdown in detail in a previous video that you can check out here in the right-hand corner or at the end of this video. But just as a quick explainer, the snowball method consists of organizing and paying your debts from smallest to largest, which allows you to allocate the payments from your smaller paid-off debt towards your larger debts, helping pay them faster. Number 5, keep your savings in a separate account. Many banks have their checking and savings under the same account. This makes it easier for you to move money from your savings into your checking account, which means it also becomes easier to spend your savings. Having easy access to your savings account can easily create temptation, since all it takes is a few taps on your phone to move money from your savings to your checkings. It becomes really easy to get those new shoes even if you don't have the money in your checking account. A good strategy is to limit access to your savings account and separate it from your transactional accounts. This will keep your money isolated and protected from transactions and will limit the temptation of a fast and easy transfer. If you want to go the extra mile, many people use a completely different bank to keep their savings, making it that much harder to access their money. Number 6. Look for any tax write-offs you can take advantage of. A big important part of money management is taking advantage of tax credits or deductions. There are many ways the average person can lower their tax bill. Of course, make sure to check with a professional before making any tax decisions. The tax laws can be quite complicated, and it is always better to have a professional help you with this side of your finances. Now here are a few examples of how people have lowered or even eliminated their tax bill. For example, let's say their friend Tom here makes $30,000 a year. After college, he decides that he is going to be frugal for the next year and split living expenses with a roommate, so his lifestyle costs around $1,300 per month out of his $2,500 a month paycheck. Since he has extra money, he decided to invest $1,000 per month to his 401k. This means Thomas investing $12,000 per year to his 401k. 401k is a pre-tax retirement account, meaning his contributions will be deducted from his total taxable income, leaving his adjusted gross income to be $18,000. He takes the standard deduction, which in 2020 deducts $12,400 for a single filer, which leaves them with a taxable income of $5,600. With this income, he falls on the 10% tax bracket, so Tom would have to pay $560 in taxes, but since he contributed to his retirement account, he qualifies for the retirement contribution credit since Tom makes under $19,200. In adjusted gross income, he qualifies to receive a non-refundable 50% retirement contribution credit for the amount he contributed to his 401k up to $2,000. Since this is a non-refundable credit, Tom will not get a refund on this credit, but this will eliminate his $560 tax bill, essentially allowing them to pay $0 in federal taxes. Now there are many ways people can lower their tax bills and use or spend money before taxes. One of the ways, as we mentioned before, it's investing in a pre-tax retirement account. Also, if you have kids and paid childcare, this can be tax deductible. If you predict you will have any medical expenses, that you can take advantage of healthcare flexible spending accounts, which use pre-tax money for medical expenses, finding tax credits, and deductions. It's like finding free money. It allows you to pay less money in taxes at the end of the year or even get a refund back. Of course, make sure to work with a professional to find the best deductions that work for you. Number 7, plan your taxes ahead of time. Most people think about their taxes when it's time to file them. But by that point, it's already too late. The tax year has already passed. Something that many wealthy people do that anyone can do is to plan their taxes ahead of time. This helps them understand what they need to do throughout the year to take full advantage of the tax incentives they qualify for. Number 8, lower your debt interest. If you have a big amount of debt that will be paid over a long period, a good idea is to use a few methods to lower the interest in your debt, which can help you pay your debts faster. A simple way that many people just don't do is ask, simply calling your credit card company and ask, "Hey, what can I do to lower my interest rate on my card?" Is not always effective, but in many cases, they might work with you, especially if you're considering moving your debt to another creditor. Another strategy is to consolidate your debts into a non-interest credit line. They are credit cards or lines of credit that offer no interest for some time. So if you have multiple credit cards with multiple payments and interest on each of them, transferring your debt to a no-interest credit line can consolidate all of your credit card debts and payments into one no payment. Now it is important to take a look at the fine print and do your research. Many accounts have transfer fees that happen when you transfer debts from another account. So make sure to consult with a professional and/or do your due diligence before making your financial decisions. Number 9, take advantage of credit card perks. This point is only if you are a responsible credit card holder. If you have your credit card usage fully under control, you can take advantage of the many perks credit cards have to offer, such as cashback or travel points. Many people use credit cards to pay off expenses that they would normally already pay, like their utilities, rent, or insurance payments. This allows them to receive cashback or points for money they would spend anyway. For example, if the monthly expenses you normally pay are $3,000 per month, they could be paid with a credit card that, let's say, has a 2% cashback. You run the expenses through credit card answers. This is money you are going to use for your monthly expenses anyway, you simply pay your credit card right away. This means that just by using a credit card and paying it right away, you made an extra $60 just for using a credit card. You made money just by paying your bills. See, the reason why there are so many credit card perks is to lure people who might not pay their debts right away to using their credit cards. This means that credit card companies make money by charging interest. The benefit is that those who are responsible card holders and pay their balances within the month don't pay any interest but can still take advantage of those perks. Number 10, continue to expand your knowledge on money management. You know what they say, your income only grows to the extent you do, so keep learning by reading books, talk to others about your methods and learn their methods. Go to workshops and learn from those who are ahead of you to continue to expand your knowledge and expertise on handling money. And as always, ladies, thank you for watching, and let's go make that money. Don't forget to hit that red subscribe button and bell icon for future videos. I will see you next time. Toodles.